Welcome to episode 15 of the Magic Hour. I'm joined by my regular co-host, Professor Andrew Laslett. How are you today, Andrew?
Oh, I'm good. Up bright and early here in Melbourne. Not quite the same time zone as our guest, I don't think.
Yes, we've got a very special international guest today, calling in from the US, Mr. Steve Molino. Now, Steve, amongst other things, you are principal at VC firm Clear Current Capital. Welcome to the podcast.
Yeah, thanks for having me, and thanks for I know the time difference. I appreciate you guys getting up bright and early to talk to me. So I'm glad to be here.
It's great to have you on. Steve, I would like to cover a few different topics today. As I mentioned, obviously investing is going to be one of them. And we'll circle back to that. But I'm just keen to guess, get our listeners across your background. So if you could give us a little bit of insight into your background, go as far back as you want. I always like taking people back to their childhood to find out really what's going on, but feel free to start wherever you like.
Yeah, no, I mean, so yeah, thanks again for having me. I'm excited to be here. So my background, I graduated undergrad with a finance degree and went straight into the traditional finance path. I worked for a big bank in like a strategy development role, and and then I thought it was fun, but ultimately I want to be closer to the investing side. So I ended up taking a role with a firm called MetLife Investments. They're a big insurance company, but they have a really big investment arm. And I was on their derivatives trading floor for a little while, and it was kind of interesting. But like, let's just say derivatives don't really get me going. So I was lucky enough to be able to move over into the private equity and venture capital team within the same firm, and there I fell in love with the private equity space, specifically the early stage space, so venture capital. And I I I I love the idea of like focusing on like new innovations and founders that are visionaries and thinking really big in their respective industries. But one thing to call out is at that time there was no mission focus. It was just traditional investing. There wasn't anything in sustainable food or all proteins. And to keep a long story short, let's just say that I woke up to what was going on in the food system, and it became an obsession. And I went super deep into the space. And at one point, I'm like, should I quit my job and join like an animal sanctuary or a nonprofit in the space? And then after a while, I'm like, you know what? I have a skill set. It's on the investment side. Let me try to leverage this skill set and apply it to an area that I now care a lot about, which is sustainable foods and all proteins. And I went on a bit of a journey to get to where I am today. So that involved working for some VC firms in the space. It involved business school. So I went back full time to business school. Um, and then I didn't have a direct opportunity to join an investment firm in this space right after business school. So I went into strategy consulting to learn a little bit more about things that might be able to help me help my portfolio companies once I go to the investment side, because I knew I wanted to be where I am. And luckily, I was able to find a role with Clear Current Capital where I am today. And I've been there for we're closing in on 3 years, and I help lead the investment activity for the firm, and I couldn't be happier.
Amazing. There's a whole lot of areas I'd love to dig in for a little bit more
Yeah.
detail there. Obviously, I think that from what you've described, that shows like a really good, self awareness around, how best to, apply your skills to an area that you want to get involved in. Because I know a lot of people we'll just jump straight into something, whether, as you said, whether it's, a not-for-profit or a charity or whatever, and put all their time into it. But it's often not the best way to go. And being able to, I guess, utilize your background and skills, as it applies from, your education and your experience in terms of the investing side of things. Was there ever a moment where you wanted to do your own thing? Do you have an entrepreneurial bent? Is there something that you ever thought, oh, I could do this myself?
I maybe like randomly from time to time, but to be honest, I find that one thing that really gets me going is the ability to learn a lot about a lot of different topics on any given day. And I had that previous to being in the sustainable food space, looking at different venture capital firms and deals and things like that. And then even when I was in consulting, even though I knew my long-term goal was to be in VC and sustainable food, consulting is you could be on a different project focused on an entirely different industry every 3 to 4 weeks, and you just learn so much. And I really, that's what gets me going. And I knew that if you're an operator, if you say I'm going to start something, you're going to learn a lot, right, about how to build a business, which has a lot of different facets to it, right? So there's still learning about different things, but at the high level, you're still, it's almost the opposite of going broad. It's going super, super deep into one company, one business model, and trying to succeed that way. And it just, I didn't, it's just not what really attracts me to how I like to work and how I like to learn. Who knows? One day maybe I'll do it, but I'd have to have just crazy conviction on one very specific idea if I were to do that.
Yeah, that makes perfect sense. Do you were you as a kid or at college, and obviously you worked in the space, like were you always, an investor? Like were you the kid at school, like reading the stock market prices and all that sort of thing? Or like how did your interest in that come about?
No, I was definitely absolutely not that. So, like I can even remember just growing up, my dad in the morning would have like CNBC Squawk Box on TV, and I remember at the time being like, I have no idea what's on that screen, and that looks so boring. Like I just had no interest in that at all. And he wasn't in finance. He's a lawyer. But I went to school. I went to college as a pre-med major, and I did well. The one semester I was pre-med, I got like it was like a 3.9 or 4.0. It was really good. But I remember in my pre-med seminar, we went around the room and everyone said like, why did you want to become a doctor? Why do you want to become one? Everyone had these amazing stories like that like changed their lives while they were younger, and this is what led them to be a doctor. And for me, I'm like, I don't know, I'm good in school and people said you could be a doctor. And I'm like, I shouldn't be a doctor. Like I definitely shouldn't. So after that, it was kind of like, okay, what the hell can I do? I'm I'm pretty good with numbers. What can you do with numbers that has some type of career? And I just picked finance, not really knowing what that was. And luckily it turned out that I actually like it.
Absolutely. You mentioned as well, a realization around, our food systems and sustainable food. Like when did that occur? And was there like a particular, incident or turning point or something that came up in your life that sort of brought you to the space?
Yeah, so for me, it's very clear. It's I watched the documentary Cowspiracy. I think it was in 2015 that I watched it,
Mm.
and I I just didn't know any of that information. I did not know about the impact of the food system on the environment. That one didn't really touch on animal welfare, which now for me is a key driver. But it led to me diving in and finding out about the animal welfare side, and it really changed the way I eat. But quite immediately, like right after watching it, I changed how I ate, and that continued and ultimately went to a completely plant-based diet. But for me, it was that like a very clear event that happened.
Yeah, amazing. I think a lot of people have similar stories where that'll be something that'll get brought to their attention that they just were completely oblivious to previously. And I mean that's the case for a lot of people and a lot of industries, where we don't know really what's happening.
Yeah,
That
and it was also interesting for, like, my family, like, I was the person in the family that would grill the steaks. I would make the burgers on the grill while everyone waited for them, like, I ate the most meat in the family. It's just that's who I was. I'm very into health and wellness, and what comes with that is an obsession over protein and probably too obsessively, and so when I said, "Oh, yeah, I'm done with all of that," it was like, I think my family was having, like, an identity crisis for me, so it was interesting.
it's definitely a challenge, isn't it? Has your family come on the journey with you, or where do you sit now? Are you the black sheep, as it were, within the family now, or how does that work?
I'd say unfortunately still basically the black sheep in the family. My wife is very, very supportive of all of it, and but aside from her, I mean, my family's supportive in the sense that if we're coming over, they'll make sure that we have something, or they'll ask, "What can you eat?" or so that they think about it, but they're not necessarily changing their own diets, which um, I would I would love for that to change. But I'm not the biggest believer in pushing people to change their behavior if they don't want to. I don't think that that's long term a sustainable thing for any type of change. So I just try to educate and tell them why I like things and share good dishes and stuff with them. So we'll see what happens long term.
Yeah, absolutely. I couldn't agree more. I think family and close friends are the hardest people to convince, and behavior change, yeah, is absolutely challenging for everyone. I'm sure you must come across a lot of really innovative companies that are working on really amazing products and solutions, which must be a really exciting part of your work.
Yeah, and I mean, that's what kind of like drew me in the beginning years of focusing on this space as an investor. It was kind of like I was seeing if I could help bring things to market that I wanted to see, right? Because like I would be lying if I said I don't miss all of the animal products that I used to eat. They're really good. If they weren't, then switching away from it would be really easy, and the whole planet would do it, and we'd be fine. But it's really hard. So it started with a lot of like just excitement around like, oh, I could kind of help create the food system that I kind of want to see. And my investment thesis and where I focus has evolved over time. It's not just simply food products. It could be now technologies or innovations that help support the shift to a sustainable food system that maybe they're B2B supply chain companies or software companies, um, but it's still all stemming from this desire to create a better food system.
Absolutely. I feel like I'm monopolizing all the questions here, Andrew. Do you want to jump in?
Yeah. So Steve, just to put a little bit of background to this question, when I first met Paul and we started talking about venture capital and how to get things going, I realized we spoke in an entirely different language. With my background being in cell biology and as a scientist for a number of years, so I try and put a scientific lens on things. So the question I'm thinking of as you're speaking is, when you're looking at companies, what are the biggest mistakes that scientists make when they're pitching?
Hmm. That's a great question, and I have like a legitimate answer there because I see this quite often. It's not uncommon for scientists who are pitching to share certain information about what they see as breakthroughs, whether it's if it's in the cultivated space, maybe they have a certain cell density or they've achieved a certain doubling time that they're really proud of, and they've done it
Mm,
in a way that's proprietary or whatever. Um, and and sometimes they share things that are really technical that are like well beyond them, even my knowledge as someone focused on this space. And what they fail to do is they share that, and then they kind of expect the response to be like, wow, no way, this is amazing. Where but you're talking to investors who, the way that we think is great, you did something, you had an innovation or a success. How does that either help you improve revenue or reduce costs?
yeah.
That's like as simple as that. Like it shouldn't be any more complex than that. In the long term, this business should create cash, and you're going to do that by selling something at a price point that allows you to have a positive margin and create cash. So if what you had is such a breakthrough, then that should either be reducing your costs or improving your revenue. And if it's not tying the scientific results back to the business and how that actually impacts it, that's a big gap sometimes. And to be clear, there's some scientists that I know there that are awesome at doing that. They tie it right to the business. And that's impactful because it says we did this big thing and this is why it's actually important. That's always really helpful.
Thank you. That's super useful. Well, super useful for me, and I'm sure super useful for any scientists within startups listening.
Yeah, no, definitely. And I mean, like, I don't blame anyone either. I'm in finance, so that's where my head goes to. But like, if you're not from this world, like, you shouldn't automatically know that. But you should always just think about who you're talking to and what they know and what they care about. And in this case, it's what innovation have you had, and how does that help you become a better, more sustainable company from a business standpoint?
Yeah, I guess it comes back to that old saying, know your audience.
Definitely, 100%.
Mhm.
I fully agree with that.
I think that's some really great insights there, particularly for a lot of our listeners that are, considering starting a business or have started a business and want to translate their potentially their research that they're doing, into the commercial world. While we're touching on it, Steve, a lot of our listeners won't, will have definitely heard of the term venture capital or VC, but they won't actually understand how it works. Can you give a bit of an overview of how a venture capital firm works? Where do the funds come from? How do you deploy them? What does that look like? What are you looking for? Just the real basics.
Yeah, sure. Yeah. So I mean, like the most basic form is like a venture capital firm. Just think of a couple of investors. They come together and they say, we want to invest in a certain area with a certain strategy. So I'll make it tangible. Clear Current Capital, we say we want to invest in sustainable food companies, and we want to invest at the early stage. So pre-seed, seed, Series A. That's what we want to do. And we think that we could generate really good returns there. And then we say, oh, we have no money. Let's go raise money. So the gist is we go out and we find what we call limited partners, which they are investors in venture capital firms. And we basically find enough of them who say, we believe that you're the right people to do this, to execute on the strategy that you're saying you'll execute on and give us the returns. And for us, it's returns alongside impact. So we find enough of them, we raise a certain amount of money and we close the fund. So let's say we raise a $10 million fund, we have a bunch of investors. And then we typically, like the most basic level, usually have 5 years to invest all of that money in a portfolio of companies, and then 5 years to harvest those returns. So to exit those companies, and usually maybe there's also a couple of years of extension, like a 2-year extension that you could add on to that. So it could be 10 to 12 years for a fund. And with those dollars over the first 5 years, you find anywhere between 10, 20, 30 companies that you invest in, and you build a diversified portfolio. And just to be a little clear on like the basics of like what that means, we invest in them. We find companies who say we need capital. We're not operating at a profit right now. We want to grow and we need money to keep going. And to do that, we're going to sell a little bit of our company. We're going to give you some ownership in the company if you give us an investment. So that's what our investments do. We buy small minority positions in startups where we don't run the companies. We don't tell them what to do. We give advice, we give guidance, we help as best we can from other ways if it makes sense. But that's kind of what it means. And the hope is that at the end of the day, that portfolio of 20 to 30 companies, so most of them are going to fail because it's super early stage investments, and that's just unfortunately how it goes. But the ones that do well, you're hoping that they do so well that they offset not only all of the losses, but then they provide multiples of the overall amount that you've raised. And most of that money goes back to our investors, and then we keep some. So that's the idea.
Thank you for that explanation. That's really helpful. How do you make your money? Do companies normally go to an IPO? Do they become profit generating? Do they get bought by other companies? Like what are some of the scenarios there?
Yeah, I mean, what you mentioned is like really like most of the options out there. Either a company is going to go public, and you can exit on the public equity markets, or most of the time, what we see in this space is really exits come through M&A. So a large company buys one of your portfolio companies, and they buy all of it. They buy 100% of the ownership. So all of the old owners get paid out, right? So that's usually what happens. I mean, there's probably a few other ways that you could kind of return capital, but IPO and M&A is really the majority of what happens.
Yeah, great. Thanks for that. While we're on the topic, what do you look for? You've obviously got your investment thesis that you've mentioned, but what are you looking for? I guess tangibly from a startup or a business when you're looking at investing, because a lot of people will. Well, there's probably two schools of thought. I think a lot of people think, oh, it's easy. I just go to an investor and they give me money, and why wouldn't they invest in my idea or my business or my product? And then there are others who it's just a massive sort of black box, and they don't understand, like people don't understand and are not aware. So if you could give a little insight into that, I think that would be great.
Yeah, I mean, for me, it's because we invest so early, a lot of the emphasis is on the team, so the founders. Um, and the reason I bring that up is like calling out a lot of the emphasis is because I truly, as an investor at the early stage, believe that when you're investing in pre-seed, seed stage companies, these companies are likely going to pivot 1, 2, 10 times as they try to figure out how to make things work. And so whatever they're presenting to you on day one when they're looking for investment, maybe that's what the business becomes. But the more likely outcome is that it's something pretty different, maybe not entirely different, but it's going to go down a different path. So you want to make sure that the people that you're backing are the right people to not only push the business forward, but pivot quickly if they have to, execute on new opportunities that arise when they're presented to them. You just it's really, for me, it's really like mostly about the people. And I have tried to quantify the qualitative information of diligence, and I created some type of like scoring mechanism, and 50% of all weighting goes to the team. And there's underlying approaches to looking at the team, but the gist is if the team isn't right, I'm not making an investment. Beyond that, though, it really just comes down to what you would think about of why should a company exist. I want the company to be solving a problem, that like a real problem that exists, and there's not really a viable solution, and they think they're the solution. And if there's 30 other companies out there that are doing the same thing, then maybe the solution already exists. I don't know that I need to do that, but if there is no solution and they're just the ones offering it, that's great. It's a white space. And then ultimately, what matters is this company creates real cash. Not day one. Some of these companies, especially if it's cultivated or something in the SynBio space, it might be long down the time horizon, but you want to see that as things progress, that there is a reasonable path to creating a business that sells a product or service that can ultimately become profitable and become a sustainable business long term. So it's really about the team solving a real problem and doing so in a way that can actually make economic sense long term. That's like the most generic I could possibly be. I'm happy to dig into like any of that, but yeah.
No, that's great. I think that that'll be really helpful for anyone considering looking to raise investment for their business. I think another interesting aspect is I'm keen to get your thoughts on sort of how you weight the financials or the potential returns of the business against the impact of the business, whether that's to do with animals, to do with sustainability, to do with the climate. How do you find that balance? Because we know, and as you mentioned before, just given your background in investing, a lot of the focus is just strictly on the financial returns. So how do you balance the two with your approach?
Yeah, it's a great question, and I think that's a good opportunity to call out the idea that like we as a firm at Clear Current Capital, we are what we call impact investors. And um, what one thing that is really paramount is it's important to us is we need to make sure that the impact of a business is directly aligned with the business model of the company. And the reason why is because, to your point, you could model out financial returns and you could try to model out impact returns. But what we don't want is for a company to potentially grow really large and become very successful on the financial side, but then ultimately not be successful on the impact side. So making sure that the business model is aligned with the impact, what that allows us to do is to basically focus on the financial side and hope that the financials, like model out the financials, see what we think it could turn into, and we hope that it grows really large. And we know that because the impact is aligned with that, as the company's financials grow and become better, we know that the impact is growing along with it. And that's really important. We don't want to just be another VC that invests for pure financial returns, and making sure that that impact's aligned with the business model is very, very important. But I mean, to the question of like, how do we model it out and look at all that? It's really hard. These companies, like I said, super early, what they're saying they're going to do today, who knows if that actually happens. The way that I use financials is that gives me insight into how the founders are thinking the business is going to go. It tells me what their assumptions are for revenues, for costs, how they might plan to hire people at what times, when they might need to have a big capital expenditure or need to raise more money. In a good financial model, that should be baked in there, and I should be able to see how the founders are thinking by looking at the model. And that's that's how I use those models at this stage. Very different for a late stage company though. Like if you're looking at like late stage private equity, those models are like very legitimate, and should be taken very, very seriously.
Yeah, absolutely. I think, sorry, Andrew, I was just going to say that, at the early stage, we get, well, from our personal experience, and I think this happens to a lot of early stage businesses, they get asked for really long-term forecasts in terms of the financials, which, as you said, companies pivot 1, 2, 3, 10 times. And so I think a lot of founders worry about, what those financials will look like, how they'll put those, those models together, because we know so much changes over time.
Definitely, and I can get that stress. Like that makes sense why it's a stressful thing to create. But if you do find an investor who invests at this pre-seed, seed, Series A stage, like really early, if they're obsessed with the specifics of individual numbers of a financial model, maybe they're not comfortable investing at the early stage, to be honest.
Yeah.
Like it's just, and that's okay if they're not. But you don't want to kill yourself over making sure the financials are perfect, because the only thing that I can guarantee is that they are wrong. Your projections are wrong, and they
Yeah.
will be wrong all the time. So just put real thought into them and what the assumptions are and be able to speak to it. But I wouldn't kill yourself over it at the super early stage.
Yeah, that's great advice. I think a lot of founders will take comfort in that. So that's great. Thanks, Steve. Sorry, Andrew, I cut you off.
No, not at all. When you were speaking before, Steve, you were talking about tying the mission to the financial success of the company and making sure that that comes true. And what I found myself thinking was, I'd be interested in your helicopter view of the cultivated meat industry as it moves from fine dining, very low numbers of customers in restaurants, to being how it moves towards a scalable commodity that mass markets are going to have access to.
Yeah, I mean, the cultivated space is a very specific one within protein, within sustainable food. And I think it'll be interesting to see. And I think from an impact standpoint, what I actually think is that it'll have little to no impact in the early days, because I really think that early adopters are mostly going to be some vegans and vegetarians who have been dying to eat meat again, right? And from an impact standpoint, what you could think of it as, impact in this sense is removing animals from the food system, getting someone who eats meat to eat cultivated, because it's produced in a more environmentally friendly way, one that it doesn't involve raising animals in the current way that we do it. And if it's a vegan or vegetarian, they wouldn't be eating meat anyway. So the impact is only created when meat eaters actually do this. So I think early days, early adopters, there's not going to be much impact. But I think, to your point, Andrew, as this scales, as this focuses more on the commodity markets, that inherently means that we will be focusing on people who do eat meat. And that's where the impact will be generated. And I think for that to be successful, it just really, really comes down to, honestly, if I had to say something at this point, I'd say it comes down to pricing first. Commoditized animal products are incredibly cheap, and most people in the world do not have the capital or the money to spend tons of money on a burger or something like that. So it'll come down to pricing to start, and then you have to hope that the product is actually giving people the experience that they wanted if they had a regular animal product. So, but it'll be interesting to see how it pans out, and it's starting, right, which is super exciting.
No, exactly. It's something well, in my career, I've at various time points I've said to colleagues, I wonder where we'll be in 10 years time, and this is definitely one of those inflection points where I can't wait to be, well, I can wait to be 10 years older, but I want to be there to know what the next 10 years have brought.
No, absolutely. And it's like, it's an exciting idea. And like, I like 10 years ago, like, were we even talking about cultivation? So like 2013, I don't remember when Memphis Meats started, right? Like I don't like, or now Upside, like it's probably around that time though. And they were nothing. They were an idea. Can this even work? And now at the incredibly small scale, but at some type of scale, they are selling to consumers, right?
Yeah.
In the US. And that's um some would say it's not good enough, but I would say this is kind of crazy that it's even happening because this is the first time that meat has ever been created and consumed in this manner in history. So it's pretty cool.
Yeah, and you got to start somewhere.
Exactly. Exactly.
Thanks, Steve.
Obviously, there's been a lot of changes in the alternative protein space over the last sort of 3 to 5 years. In a really broad question, Steve, how have you seen things evolve in that time, particularly when we're talking about the plant-based space, which I think has seen a really large injection of capital and interest, and then perhaps has come off based on some results. We've seen a similar thing with cultivated meat space, where there was a lot of money pour in, and then perhaps again some disappointments in terms of expectations, as we've just outlined, and then obviously some other areas as well, whether that's precision fermentation or in other sustainable food products. So as a broad sweeping question, what have you seen over the past few years?
Yeah, if we're gonna talk like super broad, I would say like the biggest thing that I can think of is that there were expectations for plant-based, cell-based fermentation, whatever part of all protein you want to look at. And those expectations were grand. And they were grand in terms of timing, in terms of size of the markets, growth rates, etc. And it's what's changed is now there's a little bit of a snap back to reality of remembering how difficult it is to scale food in a very quick way, especially when the incumbent industries are huge. They have not innovated in this manner ever in this swiftness. We haven't ever tried to completely reshape what people are eating and how it's being made. We've made step changes over the years, and what we're trying to do is make complete leaps. And I think expectations coming back down to reality has resulted in just capital, less capital flowing into the space across all verticals, and companies now making promises that are a little bit more realistic. And I don't know that those promises were always um, I don't know if they were always like said with like malintent. I don't think they were. I think a lot of entrepreneurs themselves believed that they could do certain things within a certain time frame, and I think it's just we're realizing it's going to be harder than that. It's going to take some more time. And then one thing I'd call out specifically on plant-based is there is one of the theses that everyone was saying is that we need to make plants taste like, look like, feel like exactly like the animal product that we're trying to displace. And I think there is a market that exists for that. It's a couple $1 billion right now. It's like 7 billion worldwide for that. But I don't think it's as big as what everyone thought it might be. So I'm seeing some trends recently of put the plants back in plant-based, and focus more on whole food plant-based versus trying to make it look like the real thing, taste like the real thing. So we'll see where that one shakes out. But yeah, there's been a lot of snapback to reality compared to initial expectations, which has been interesting to see and experience.
Very well put. How obviously, venture capital plays, a large role in driving, innovation in sustainable food production. What role do you see for potentially governments and also the traditional incumbents within those industries? Whether it's animal ag or dairy or whatever the case may be. How do you see, or what do you think their role should be moving forward?
I mean, I think their role should be more on the earliest stages, meaning like really like funding R&D, and legitimate research in potential innovations within the food system that could make our planet more sustainable, remove animals from the food system, make people healthier. And the reason I think that a lot of the focus should be on the earliest stages is because when you look at the sustainable food and alt protein space, basically, however many years ago, call it 8 to 10 years ago, there were people saying we want to push cultivated meat forward or plant-based or fermentation. Not, I mean, some of it wasn't really talked about, but at the earliest stage, they were saying we want to do this, but we don't have any money, and was no government support, and there weren't any strategics funding R&D in the background in these areas. So the only capital at the table was venture capital. But the problem with that is that venture capital, to be successful using that type of capital, you have to move very quickly and go from idea to prototype to commercialization relatively quickly for future venture capitalists, the ones who invest later dollars and then at some point private equity to still be interested. So when you use venture capital to fund R&D, and then you need multiple rounds of VC to still just be in the lab, and you're not getting closer to commercialization, it just doesn't fit with the model, really. Like, the founders get diluted too much, and then by the time you're raising your Series A, Series B, it's like you're at valuations that don't make sense for a company that hasn't sold a single thing or is still within a lab, and it just doesn't really make sense. I say all of that because it would be amazing if, instead of using venture capital to fund R&D for the first 2 to 5 years for like a synthetic biology play within food, if there were government grants or resources that allow companies to do that research and get it to the point where they can start thinking about commercialization, then that's a perfect time for VC to come in. Then it matches the model, and you could take it from there. But until that happens, we're still going to be trying to help. We're going to be trying to fit VC in with a model that it was never really, with a role that it was never meant to play, which is funding super early stage research. So I would love to see that. I'd love grants, government grants, and strategics in the space to be working on the R&D in the background and funding that.
Yeah, that's a really good view. Do you see anywhere or any country that's doing that well at the moment, or is everyone need to need to pay a bit more attention to that type of model?
Yeah, no one's doing it well. I mean, well, you know what? Singapore is doing a pretty good job. Singapore is doing a pretty good job. They actually have legitimate government support, and I think it's mainly because they have, like, what is it, like 30 by 30. They want to, like, produce 30% of their food, like domestic food production, like coming from them or something like that. I'm probably butchering it, and I should definitely know that more. But because they're a very small nation, they don't have a lot of land or agricultural resources to feed 30% of their population with domestically produced food. You need to focus on innovation. You need to focus on alt proteins and sustainable food innovation. So they're actually putting money and resources behind it. That's pushing that forward. But besides them, yeah, every country's here or there put $10 million into something or $15 million into another thing for R&D, but that is so menial. That's literally nothing. So I wouldn't say any other country off the top of my head is doing a great job with that.
Sure. Well, what about traditional industry? Do you see them getting involved? Like, do you have any sort of oversight or insight into, perhaps it's, traditional animal agriculture? Do you see them getting involved, whether it's in cultivated meat or in precision fermentation? We know it, like we know a number of companies have tried the plant-based space, dipped their toe in and perhaps dip back out. But what are you seeing there at the moment?
I mean, they're doing kind of what I'd expect them to do. So there are strategics in the incumbent animal ag space that are either investing in companies or having strategic projects with companies to see if it makes sense. And the reason that they're doing that is because they don't actually they don't need to change today, right? These are hyper cash generating businesses that create the food system. So I think what they're doing is they're trying to see, is there anything that they're missing? They're trying to stay ahead of all the innovation so that they could be a part of it if they want. Um, but they're not going to do it in a way that really puts them at risk, like from a financial position. So like even like what was it? I think like JBS, they came out with a cultivated meat facility is like 60 something $1 million. And it's up focused on R&D. So is that nothing? No, that's a $60 million facility, and I'm sure real R&D will happen there. But that's like a fraction of a percentage point for 1 year's profit for them. Like that does not matter to them. That's not a risk. So it's them being involved and staying ahead of the curve, but just I think making more so that they are not in a bad spot from like a defensive position. But it makes sense. That's their fiduciary duties. Make a lot of make a lot of money, right? So it's not to fund completely moonshot ideas that change the food system. So I'm seeing what I kind of would expect from them. And actually, one thing I'll add, I forgot to think of this in the last question of other countries doing well. I'll also call out Canada. They have a couple of really big government resources there. So like Protein Industries Canada and a couple others that are putting real money into the space. So I didn't want to forget them either.
Yeah, great. Thanks for mentioning that. We've got our listeners worldwide who'll be really interested in that space. Just talking about, I guess, a little bit more about the fundraising environment. Obviously, it's been pretty tight for the last probably 18 months or so compared to the prior 18 months. What's your view of the fundraising landscape at the moment, potentially for startups or businesses looking to raise money soon or that have been trying to raise money?
Yeah, it's definitely tougher than it was like pre 2021. Like peak time period was like at the end of 2021, and then it got pretty difficult, and it has been since. I think it's getting a little less difficult out there. But one thing that I would say for any of the entrepreneurs that are listening to this is like honestly, deals are getting done. They've been getting done the entire time, even during the difficult time period, and it really just comes down to like are you doing something that is really solving a problem that exists in the market, and are you doing it in a way that can be a sustainable business? And that's a really hard thing. Like it sounds like I'm simplifying it, but companies that are able to prove that, founders that are able to prove that, we have been investing, we've continued to invest during that time, slower, but we've been investing, and we've seen the same with other investors. So um if you have a good company out there that's really solving a legitimate problem in our food system, like don't like give up on being able to succeed. Like you just got to find the investors that believe in the vision that you have, and you could get a deal done for sure.
So finding, particularly for the business owners, finding the right fit when it comes to an investor is really important.
Oh, 100%. I mean, and like I could say, like if it's any consolation, it's the same thing for the VCs that you're trying to get to invest in you. Like for us, like we're Clear Currents, a sustainable food investment firm with a primary focus on alt proteins. Like when we go to raise money, it not everyone wants exposure to just that, and not everyone cares about this topic. So just like a founder is talking to hundreds of potential VC investors, like when we go to raise, we talk to hundreds, if not more than 1,000 potential limited partners that want to invest. And it's the same idea. I can tell you the ones that invested in us were the ones that were aligned with what we were trying to do. They believed in in the type of impact that we're trying to create, and they were open to the return thresholds that we were pushing for, which for us are traditional venture capital returns, but that's what we said we're going to try to do. But we had an infinite amount of no's and a handful of yeses, just the same way that a deal would get done with a founder raising a round of VC. So it's all about finding the investors that are aligned with what you're trying to do. And if they're not aligned, it's going to be a really hard sell to try to get them to change their mind.
Mm. Uh, One question that we get asked a lot when looking for investment, or I get asked about our experience. Would you suggest to founders within the alternative protein space to only look for investors with experience in the space, or should they look outside of the space as well? Which might be a company or a VC firm that's accustomed to investing in technology, or do you think, they should just really be focused on the specialists within the space when they're looking for investment?
I mean, the short answer is no, don't look at just the specialists. But the longer answer is the specialists are obviously the low hanging fruit, right? Like they know the space, they're focused on the space. But there's also a risk that those investors have the exposure to your specific vertical within alt protein. They have the exposure that they already want. They don't want to increase their exposure, right? Because maybe for a few years they've been focused on that space. They made a bunch of investments and they feel over allocated or appropriately allocated to that vertical. So there's a chance that it's really not that fruitful to talk to them. But going outside of the specialist investors is important, because a lot of those firms they might make one investment in this space and you might be that one investment. And I think it's just really about being thoughtful about the firms you're reaching out to that are not specialists in this space. Like you don't want to do a spray and pray and just hope that someone responds. But if you think there's a VC firm out there that's done a lot in traditional agriculture, and you've kind of noticed that they've looked at a little bit of synthetic biology, you're a cultivated play or a precision fermentation play, reach out and say, like, I'm wondering if you're interested in this because it seems like you're kind of trending towards that. Would love to explain to you why we think we'd be a good fit. But if you just reach out to a firm that only does VC investments in B2B SaaS, you're probably not going to hear back. So you got to be thoughtful about who you're reaching out to. Um, but but yeah, I mean, no harm in reaching out to the specialist investors to start. You could always ask them if they have recommendations of other investors that they know who might be interested as well.
Mm. Sorry, Andrew. I've got two more
No.
questions, Steve, around that, which I think will be helpful to the listeners. Feedback. So obviously when you're looking for investment, there's a lot of no's, but in between yeses, and some VCs will give you some really detailed feedback, and others will give you, what would look like a generic brush off. How do you go about providing feedback to companies that have pitched to you? And then on the other side, like, what should founders do with that information, and how subjective is it really?
Um, well, I mean, my gut, I almost want to say, oh, it's super subjective, but which it might be, but they're like that would I don't want to tell founders just like write off any feedback. I think so. For me, for the first question is like, how do I give feedback? I like to provide legitimate feedback. Like if there's a reason I'm passing, I like to be very clear on that. Um, and and like I just feel like that's like what you owe to a company that you've spoken with, and um, that's just how I do things. And most of the time, founders are very like appreciative of that and like respectful of that. And most of the time, it's on things that they can't really convince me otherwise. Like if I look at a company and they've already sold 50% of their equity and they're at a seed stage, and I don't think there's enough equity left over for the many venture rounds you need. Unfortunately, we just can't we can't do this right now. They can't all of a sudden change that. You can do a cap table recap, but that takes time and money, and who knows what that looks like. So, um, but like, so I try to provide that feedback for the founders. Like, how much should they take that feedback in, or think about it? Like, I would just reemphasize this idea of finding the investors that are the right fit for you. If you get feedback that seems subjective or you don't agree with it, um, and you feel that like they missed the mark on something, then maybe you could let them know, like, oh, I actually think to address that, just wanted to let you know this. But most of the time, they made their decision, and if you don't agree with it, you just say, okay, that's not going to be a good fit for us. Um, the only time that I would say like really take it in and maybe make changes is if you keep getting repeated feedback around like something very specific, your valuation's too high, or you're a technical co-founder and we're nervous that you don't have the right business skill set within your team, or the opposite, you're you're a non-technical founder and this is a synbio company, like you need like a chief science officer. Like if you keep getting stuff like that and from many different investors, then like maybe take a look at it. But you're gonna get so many no's. You're gonna get so many different reasons why they're passing. So if you obsess over every single one, you'll drive yourself crazy. And I don't believe in that.
Yeah, that's really great advice. So just one other question I wanted to ask you around that. Obviously, the alt protein space is quite collegiate. Founders all talk to each other, want to help each other out. How does it work on the VC side? Do you speak to other VCs? Are you competitive about deals, or are you bringing other investors in? Like, how does that landscape look?
Yeah, I mean, overall, it's I don't want to say collegiate, but like at the end of the day, like a lot of the a good way for like investors to find new deals is they continually talk to other investors and share deal flow. I think for me, I only do that with people that I really trust and I built up relationships with over time, or if I notice I'm sharing good deal flow with someone and then it's been 5 times that we talked and they share like really just like not good things with me, then I'm like, all right, they're clearly keeping things to themselves because they don't want to share their good deals. So that affects things. But then there is like it is at the end of the day, it is competitive. Like this is like if a founder's raising $1 million round and you know that you write $500,000 tickets, you don't want to kind of share that with another investor that writes $1 million tickets because then if they get that they're interested, they're going to take the whole thing, right? So there is a bit of that exists. I think that in the early days of this space, there was a lot of mission driven firms like ourselves that um, it was just purely like mission driven, shared deal flow, everybody help everyone out. And it was like a really interesting thing because that's not really normal in venture capital.
Mm.
Like it's just not at all. Um, for I think for better, that's kind of gone away a little bit because now there's a lot of non-mission driven firms that are in this space that are looking at this from a financial return standpoint and but they're considering alt proteins and sustainable food. The reason that's a good thing is because that means more capital is realizing there's an opportunity here. So if becomes a little bit more competitive than it used to be, that's yeah, it's less like rah rah and fun to talk to everyone, but that's good for the space overall.
Yeah, for sure. That's really interesting. Just one last question from me, Steve. What are you excited about most at the moment? Whether that's something coming up, whether it's like one of your portfolio companies at the moment. What are you excited about at the moment?
Man, I'm excited about a lot of things. I mean, there's a lot of good developments in our portfolio companies. Like, I don't want to like pick any because I don't want anyone to feel like I like them more than others. I love all of our portfolio companies. Um, I think some things that I'm excited about, like on potential new areas of investment within the sustainable food space, is like I'm getting really excited because I'm seeing a lot of like enabling technology plays that are either within cultivated or in fermentation, and that could be biomass or precision fermentation, or even some traditional fermentation. But they're like real enabling technology plays where if they work, they could potentially make the entire fermentation industry more efficient and improve yields or reduce costs or speed up fermentation times. And those types of things get me really excited because um, we've done a lot of things with companies that create an individual product, which is great and important. We've had a lot of successes there. But I think for the entire space to continue to flourish, we do need to see legitimate opportunities that push the whole space forward. And so seeing some really exciting things in enabling tech that I've been digging into. And then um, other things that I'm getting excited about is I'm seeing a lot more elegant approaches to side stream valorization and upcycling of waste products as inputs to other products. And that's always existed using waste resources, like using spent like spent grains and all those things. And like that's existed for a little while, but I'm seeing really, really talented founders in that space that are addressing things that in ways that are again more elegant and more scalable and really hitting on like key pain points as opposed to like a spent grain bread that's cool but like I like I don't I mean I'm being a little biased here, some people really care about that, but um I'm seeing a lot of innovation on the side stream valorization side that I'm getting pretty excited about. And sorry to anyone that I offended on bread. I like bread. I eat a lot of bread.
No, that's great, Steve. Andrew, any last thoughts?
I think it's been a real privilege and opportunity for me to be a fly on the wall and listen to you guys chat, and the amount of learning that I've gone through in the last 50 minutes or so in this has been fantastic. And I'd really encourage, if this particular part of the podcast gets made into a clip, to encourage people to listen to the whole show, because there's a lot of really key nuggets of information in there for anyone interested at all in the alt protein startup space.
Thanks,
Yeah, well, I mean, I
Andrew.
appreciate both of your time. I mean, like, this has been fun, and like, I always find it like funny, honestly, like funny that like startups will tell me like, Thank you so much for your time. It was so helpful." And I'm like, "You guys realize you're like the ones doing the legitimate work." You're like, "Yeah, we're diligencing you guys, and we're like seeing if we want to invest and then support you, right?" But like, support, like, we could support all day, but we're not building the things that are going to reshape the food system. So like, you guys are doing like amazing work. I appreciate your time, like, without a doubt.
Thanks so much, Steve.
Thank you.
If members of the audience want to find you, or perhaps want to chat to you, or have a deal that they'd like to get in front of you, what's the best way for our listeners to find you or Clear Current Capital?
Yeah, I mean, like, the fastest way for me is like, I'm very responsive on LinkedIn. I would just ask that, like, if you go to connect with me, just shoot me a note in that intro, like, so that I know like who you are and why you're reaching out. That makes it really, really easy for me to just like quickly connect and get a conversation going. If you don't want to do it that way, then like, you could go to our website, like Clear Current Capital's website, and we do have like I don't know what it is, like an intake form or something, but I legitimately read every single one of those. So if that's how you want to reach out, I'll see it for sure, and we could connect that way.
Excellent. I'm always a big fan of LinkedIn, so I encourage everyone to get on LinkedIn. Steve, I know you do a lot of writing as well as a regular podcast with Green Queen. So I encourage everyone to look out for that as well, and Twitter as well. I know you're on there. So thanks so much for your time today, Steve. As Andrew said, it's been really insightful. Not just for us, but for the listeners as well. So thanks once again for your time. It's always great to chat.
Yeah, thank you, and hopefully we talk again soon.
Absolutely. Thanks, Steve.
Thanks, Steve.